In this video, you are going to watch 3 real ETH charts where price spent weeks coiling in a tight range, then broke out sharply, and every one of them failed. Not slowly either. The fastest one fell apart in 16 hours, the slowest in about 2.5 days. Here is what happened, and the pre-entry warning each chart was already showing. Before the charts, it helps to have a mental model for what we are looking at. The framework comes from Richard Wyckoff, and it breaks a move into 3 phases. Phase 1 is the range. Price stops trending and moves sideways inside a contained box, while larger participants build a position. Buyers accumulating in a range that will eventually break up. Sellers distributing in a range that will eventually break down. Either way, the range looks quiet because it's meant to look quiet. Phase 2 is the sweep. Right before the real move begins, price thrusts sharply beyond one edge of the range, below the low ahead of a breakdown, above the high ahead of a breakout. That boundary is where resting stop losses and pending breakout orders are stacked. When price pushes through it, those orders fill, and those fills are the fuel for what should come next. Phase 3 is the trend. Mark up if the range was accumulation, mark down if it was distribution. Price is supposed to hold beyond the level it just broke and keep going, with shallow pullbacks and consistent progress in one direction. Every setup in this video followed that script right up through the sweep and the entry. What we are looking at here is what happens when phase 3 simply doesn't show up. The first chart is ETH against USDT on the 4-hour time frame. The range runs from November 12, 2021 at 08 UTC through December 4, 2021 at midnight, roughly 3 weeks of sideways action between a high of 4778.79 and a low of 3909.89. Because this is a short, we're watching for a sweep below that low, and it arrives hard. On December 4th at 04 UTC, price drives all the way down to 3356.56. The sweep didn't just tag the low, it plunged more than 400 points beneath it. By the time entry actually triggers, 4 hours later at 08 UTC, price has already rallied 535 points off that low, filling at 3891.50. The stop loss has to sit at 4361.45 to stay above the range, putting the risk on this trade at roughly 470 points. About 12% of the entry price, an unusually wide stop. An extremely violent sweep doesn't just clear liquidity. It can mean price has already reversed a long way before you're able to get in, forcing you to risk several times the normal amount just to hold the trade. From there, the setup never recovers. Instead of continuing lower into a markdown trend, price grinds back upward, and by December 6 at 20 UTC, the trailing stop is hit for a loss of 0.98R, essentially a full risk unit. The real lesson isn't what happened after entry. The size of that stop before the trade was even taken already told you this was low quality. The second chart is again ETH against USDT on the 4-hour time frame, this time from 2023. The range runs from September 12 at 0400 UTC to October 4 at 1600 UTC, just under 3 weeks, between a high of 1694.42 and a low of 1562.98. The boundaries hold, a little choppier inside than the first range. This is a long, so the sweep spikes above the high. It happens on October 1st at 20 UTC, with price touching 17,8500, more than $90 above the range, a clear overshoot that clears out the sell-side stops and the wrong direction breakout traders. Entry follows 4 hours later on October 2nd at 00 UTC at 1734.45 with the stop at 1677.88. That stop is worth pausing on. The risk is only about 57 points, roughly 3% of price. Tight, normal, nothing like chart 1, but the follow-through never comes. By October 6 at 1600 UTC, 16 hours after entry, 4 candles on this chart, the trailing stop is already hit and the position closes at a loss of 0.955R. A tight, reasonable stop doesn't protect you from a fast invalidation. When a long can't build momentum across 4 straight candles, the breakout wasn't real, however clean the entry looked. The lesson here is about speed. The faster price moves against you, the more clearly the setup wasn't what it appeared to be. The third chart might surprise you. Same pair, same time frame, this time from late 2025. The range runs from September 26th at 2000 UTC to October 10th at 1600 UTC, about 2 weeks, between a high of 4755.77 and a low of 3950 hundreds, with a choppier interior than either of the first two ranges. This is a short again, and the sweep is the most violent of the three. On October 10th at 20 on trial UTC, price drives down to 3373.67, more than $576 below the range floor. Just like chart 1, that violence shows up in the stop. By the time entry triggers on October 11th at 0000 UTC at 3820.57, price has already rallied 447 points off the low. The stop sits at 4170.49, putting risk at roughly 350 points, about 9% of price. Narrower than chart 1's stop, but still 3 times chart 2's roughly 3%. Same warning as chart 1, a sweep this sharp out of a messy range isn't the same signal as one out of a tight range. Price never breaks down. It reverses almost immediately, and by October 12 at 12 intra UTC, the trailing stop exits the trade at a loss of 0.624 R, smaller than the other two, but the direction was wrong entirely. What looked like distribution and a breakdown was closer to a shakeout before a move higher. The messy range was the first clue that the sweep out of it couldn't be trusted, and the oversized stop it forced was the second. 3 charts, 3 losses, all faster than you'd expect. The 2021 short had a clean range and a violent sweep that forced a stop about 4 times wider than normal, a warning before the trade was even entered. The 2023 long looked clean and still failed in 16 hours, proof that speed matters as much as the setup. And the 2025 short reversed entirely, out of a range too messy for its sweep to be trusted. Range, sweep, breakout. The sequence is real, but every part of it has to hold, and sometimes the chart tells you that before you even click buy or sell. If you want more real breakdowns like these, wins and losses both, subscribe.